Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The Nasdaq's powerful surge hits a road bump in Asia, with the benchmark trading lower. European and US futures in the green, though, as traders digest blockbuster numbers from Palantir and count down to SpaceX later today. President Trump says his offer of talks is Iran's last chance, as Tehran denies negotiations with the US are even taking place. And HSBC beats profit expectations and announces a new buyback of up to $1 billion. We'll hear exclusively from the bank's CEO in just a few minutes' time. Well, a very good morning. Welcome to Tuesday. Let's take a look at the picture in markets. Asian stocks are slipping. The MSCI Asia Pacific Index down 0.5%, so failing to follow Wall Street's tech-led rally yesterday, in part because it's been a choppy session on the Kospi, which is now down 0.8%. The S&P, meanwhile, having closed near a record high, does look for more gains today, and futures higher here in Europe as well. Higher 0.3% for Euro Stoxx 50 futures. Now, flip cross-asset. And in fact, this morning we have Brent edging higher, up 1.5% to $85 a barrel on the nose. We had its biggest drop in a week yesterday. Traders focusing on President Trump's latest offer of talks now as what he says is Tehran's last chance. But gold range bound as investors monitor those diplomatic efforts, and the yen posting its first decline in 5 days as the impact of that last intervention starts to fade. Hence those constant debates about whether sinking all of this money into propping up the Japanese currency is really all that effective anyway. We're down 0.2% on the yen at 157 per dollar. Now, here's what we're looking ahead to today. The risk events on the agenda. At 1:30 p.m. London time, we get the latest US trade data, though these numbers do predate the latest tariff announcements. At 3 p.m. London time, it's US JOLTS numbers. They come with a disclaimer, of course, that the job openings numbers have been subject to big revisions in recent months. And amid a sea of earnings, today we'll hear from SpaceX, the first time since the IPO, and since that point, of course, the shares have tanked, so those will be very much in focus. Let's get started. We begin with stocks in Asia failing to follow that tech-led rally on Wall Street. The volatility continuing on South Korea's Kospi. So let's go straight to Winnie Su in Hong Kong for an update on how Asian markets are faring this morning. Winnie, what are you watching?
Yeah, good morning, Lizzie. Well, we're seeing Asian stocks extending declines for a second day. But just to put things into perspective, we did see the gauge jumping more than 5% on Friday. So it seems like investors still digesting those moves at this moment. Well, you just mentioned how South Korea's Kospi index still very volatile, fluctuating throughout the day, but now more leaning towards the downside. Some caution around the Chinese competition after Reuters reported that CXMT is in talks to build a second chip factory in Beijing. And also we're seeing some rotation into the small cap gauge Kosdaq as the gauge in fact jumped as much as 5% earlier today. The Japanese stocks also under a bit of pressure. It's a very big week for earnings in Japanese companies, and we did see Mitsubishi Financial, in fact, being the biggest drag on the Topix index after its earnings, unable to impress investors. Now, sticking with Japan, we take a look at where the Japanese yen is trading as we flip the board and see how Japanese yen today weakened by about 0.2%, and that is coming as those gains from the intervention, especially that joint intervention between the U.S. and Japan, continue to lose steam. Now we are seeing the gains after 4 days really has started to unwind into today, and that is driven by some speculation and some caution as investors see these gains not as sustainable given the rate differentials, and they want to see more reassurance from the Bank of Japan to raise rates earlier and potentially have a more hawkish tone. And that's also reflected in the bond space as we saw the 10-year bond auction seeing its weakest demand since May last year. And we are seeing yields on that space rising as well, given the expectation for the Bank of Japan to move earlier. Back to you, Lizzie.
Winnie, thank you very much. That's Bloomberg's Winnie Su. Well, turning back to European earnings this morning, and HSBC has announced a fresh stock buyback as it reported second quarter results that beat estimates. The bank said that it would purchase as much as $1 billion of shares as it reported a $10.1 billion pre-tax profit for the 3 months through June. Bloomberg's Francine Lacroix now joins us from HSBC's headquarters in London. Francine, over to you.
Lizzie, thank you so much. I'm delighted to be joined by George Elhedery for an exclusive conversation on the back of those good results. Mr. Elhedery, thank you so much and welcome to Bloomberg.
Good morning, Francine, and thank you for joining us at HSBC.
Look, $1 billion in buyback is actually much sooner than expected. I mean, what does this say about the strength of HSBC right now?
Well, I think, the results as a whole are demonstrating that we are becoming the stronger bank that we set out to build. We're very pleased with what we announced this morning. We're growing across all our indicators, our revenue growing, our loans and deposits are growing, our fee income is growing. We generated returns of 19.5% on tangible equity. So this is a good demonstration of strong business momentum. We're also very pleased with the progress we're making on the strategy, which we're executing with precision, with discipline, and at pace. And we've upgraded some of our strategic deliverables, including simplification-related saves, and just announced 3 more non-strategic exits over the last 10 days. That's 15 exits since 2025. And all of this is giving us capacity to invest, capacity to accelerate our investment. And finally, let me say we're very confident in the potential of this bank. We're very confident in our ability to unlock it. We are now a leader in a number of areas where we're operating. We're the Asian leader in wealth management, the world's trade bank, and we have structural growth opportunities along our footprint. Asian wealth, Asia buys Asia, the UK growth opportunities. So we're pleased to put more of our strength at the service of our clients.
It's impressive because when you privatized Hang Seng last year, you said, look, in terms of buybacks, we'll probably take a couple of quarters. So what does this big buyback actually tell us about the return generation capability of the bank post Hang Seng?
Yeah, so we're pleased to have resumed buyback this quarter, 3 quarters after we announced Hang Seng. We said at that time that our priority would be to rebuild capital post the privatization. We estimated 3 quarters to be about the time to build that. 3 quarters on, we're able to return excess capital to shareholders. Remember, our priority use of capital first is the dividend payout ratio. Second is supporting the organic growth of the business. Organic growth within our risk appetite at the right returns, within our strategic priorities. And we're very pleased our loan books have grown. UK has seen consistent growth, and we've been able to lean in. We're very pleased to see Hong Kong finally resume to loan growth. So those will be the priority. Of course, excess capital, priority distribution mechanism is share buybacks, hence the $1 billion.
Your head of corporate investment bank said you could actually become a 300 billion pound, capitalization bank shortly. Or I think by 2030 is what he said. You're 30 billion away from that. Do you think you can become 300 billion in terms of size in the next 6 to 12 months?
Well, look, we're certainly very pleased with the share price reaction to the delivery of our strategy. Where this will go as a matter for our shareholders to judge. What I'm really focused on is delivering for the business, focused on all the growth opportunities that we're driving for the business, delivering the strategy and the simplification at pace. And the upgrades we have shown in our capability to do so and the speed at which we are able to do it safely are good testament of the capacity we're creating to invest even further in the business.
George, you've also said that Hong Kong would overtake Switzerland as the world's largest cross-border wealth center by the end of the decade. Actually, it's done so already. What does that mean for wealth creation in Asia and your story in it?
Well, yeah, I'm very pleased to see, Hong Kong again becoming this world leader for cross-border wealth management. Hong Kong is a home market for us. We are the leader in wealth management across Asia. We've grown our wealth balances in Hong Kong by 10%. We're at $500 billion wealth management. We continue adding clients in Hong Kong, 640,000 new clients across our 2 brands, the 2 iconic brands we hold in Hong Kong, HSBC and Hang Seng Bank. So we're very pleased with the momentum that Hong Kong and the sophistication that the Hong Kong as a platform is creating to be the cross-border leader in the world. Remember also Hong Kong is a technology hub. We're seeing a lot of investment in Hong Kong in AI. We will be launching very soon, the next couple of months, a stable coin in Hong Kong, as their leading center for bank-issued stable coins within a very good regulatory framework. So all good developments given our presence in Hong Kong.
I mean, for Hang Seng, how many more synergies are you expecting to come from that?
Yeah, I mean, Hang Seng synergies, we're executing more than 80% of all the synergy work streams. So this is going on as per plan. We've already announced leadership across most of the infrastructure areas, the back office areas, the technology areas, the manufacturing areas. This will allow us to create the alignment and the synergies that we want to achieve. I'll give you one example, very telling example. In Q2, Hang Seng, as of May, started to use some of the digital onboarding capabilities, customer acquisition capabilities that HSBC built. They were able in Q2 to double the number of clients they onboarded. 60,000 clients onboarded in Q2 compared to 30,000 in Q1. Immediate, visible benefit of those synergies.
George, we have a new Prime Minister here in the UK. Do you think a possible UK tax on banks is a possibility?
Look, that's a matter for the government. What we're really focused on is supporting the government and the government's intention to support growth in the UK. Now, if you want to achieve growth in the UK, you need businesses that are investing. You need confidence. For businesses to invest, they need to be able to access financing. For them to be able to access financing, they need a strong, well-capitalized banking sector to support them. So our role, UK is extremely important for HSBC, it's a home market. Our role is to support all businesses across the UK. We support around 700,000 SMEs in the UK, across the UK. And we've grown our lending to them 12%. We've grown our lending to all businesses in the UK about 10% or $10 billion US. We already pledged another £5 billion of investments to support SMEs in the UK. All of that is what is supporting, or hopefully supporting, that growth that we wish for the UK.
Can you talk to me a little bit about AI? So Bill Winters of Standard Chartered last week said that they were using a combination of Chinese and US AI models. What are you using?
We're using a broad range of AI models. We're investing in a broad range. We're partnering with a broad range of AI partners, investing in a broad range of AI models, but we're doing so thoughtfully and strategically. We're deploying AI responsibly and safely. And we have now multiple hundred use cases, either in production or in pilot stage, and we're seeing real benefits. I mean, in coding, we're seeing in areas productivity up to 300 to 400% higher. In hyper-personalization of service to clients, we're achieving great benefits. Now, more than 2,000 of our wealth relationship managers have access to AI tools that help them hyper-personalize advice to clients. And we've rolled out productivity tools and productivity capabilities to more than 200,000 of our colleagues, helping them in their day-to-day needs.
Are staff worried actually about redundancies, about being able to apply these models, and how do you handle that?
And the important thing for us is make available to all our colleagues both productivity tools, but also training materials and knowledge management materials, so they all individually can become more productive and more impactful in the way they do business for our clients. Everybody wants productive staff, so I'll be extremely happy if all our colleagues can become those productive versions, those more performing version, future-ready versions of themselves because of all the tools and the capabilities we're putting in front of them. And frankly, if we generate this productivity as a bank, I would reinvest it in those colleagues who help us accelerate our strategy.
Talk to me a little bit about digital tokens. Do you have to cap? Because there's still AI implementation is expensive. So are you letting people experiment at the moment and then cap it at some point, or do you cap it from the start?
Yeah, so as I said, we're investing in AI very actively, but we're doing so thoughtfully and strategically. I am tracking license fees and token cost. It is important for many of the flagship initiatives that we see the benefits and understand what the benefits are. I'll give you an example. Onboarding for clients, for wholesale clients, we've already rolled AI capabilities in the space and achieved 50% productivity gains, and actually 50% speed in delivering the service. So a clear example of benefits realized. For many of the other initiatives, we track benefits. For some of them, the benefits may be non-financial. Benefits could be improved productivity, improved quality of service, or the benefits could be, being able to access a wider range of clients for a wider range of services.
Just very quickly on the divestments, because you have done a lot. Is there anything else on the table that you want to get rid of in the next couple of quarters, or in the next quarter?
So look, we're very pleased to have announced three divestments of non-strategic activities over the last 10 days. That's taking the total to 15 now since 2025. We're committed to simplifying the bank. We're committing to focus on those areas where we have market leadership, where we're meaningful to our clients, where we can generate growth, we generate the right returns. We're doing a review at pace of those activities that are either low returning or non-strategic, and we expect to be able to reach our target profile and our target geographical footprint relatively shortly.
Georges Elhedery, thank you so much for joining us. That was, of course, the Chief Executive of HSBC. With that, I'm going to send it back to you in the London studio, and we'll go through the numbers, I'm sure, all day, Lizzie.
All right, Francine, thank you so much for that exclusive conversation. And indeed, the HSBC CEO there saying that he's pleased with the progress he's making on strategy. A strong set of results for the second quarter, including that $1 billion share buyback for HSBC. The Hong Kong shares paring some losses through that interview. And of course, we will be watching HSBC on the London listing at the European Open. Now, let's stay with earnings and turn over to Aramco, because we also have numbers coming out from the world's biggest oil exporter for the second quarter. The backdrop, of course, is higher oil prices from the Iran war, but also all of the disruption that comes with that. And the hot headline is that Aramco's second quarter adjusted net income beat estimates. So coming in at 125.2 billion rial. The estimate was for 116.75 billion rial. The CEO seeing sustained production and exports, and the company insisting that it demonstrated its ability to maintain business continuity through this quarter. Well, still ahead, we'll continue with earnings. We'll talk earnings with the chief executive of Nedbank, one of Africa's largest financial services groups. But first, President Trump says that his call for talks with Iran is the country's last chance. The latest from the region next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Turning now to the geopolitics, and President Donald Trump has threatened consequences if his latest offer of talks with Iran does not result in a deal.
Well, you don't know. I don't know. I think we're going to maybe get something, but I want to give him every last chance before decapitation. Very tough to do what we have planned, still planned. We'll see what happens, but it's a very, very tough thing to do. I think I'm very proud of the fact that I'll give people a chance. This is a big move. To do an attack that big on a country, I'd rather not do it.
Decapitation. But important to note that Tehran's denied negotiations with Washington are even taking place. It says that talks with Oman to get more ships moving through the Strait of Hormuz, though, are making progress. Let's get more now with Bloomberg Horizon's Middle East and Africa anchor, Abir Abu Omar. Abir, just talk us through the latest state of play with these talks, then.
Good morning, Lizzie. Well, I mean, you just alluded to it, but then the big question in all of this, of course, is what talks, right? So if you talk to President Trump, he's saying that talks are actually ongoing with the Iranians, not specifying who with or where they're taking place. And then according to Iran, they're saying that there are no active discussions that are going on with the United States. So there's a lot of conflicting statements that are coming out from the two warring sides. You heard President Trump, and you noted he did say decapitation, that he wants to give them every chance before decapitation. And then he also said that the Iranian leadership is, quote, unbelievably incredibly duplicitous. He also criticized the way these things have been happening, the discussions essentially. From the Iranian side, they've been very clear from the very beginning, Lizzie. They said that talks with the United States can go on through mediators, through delegates, but active discussions have not taken place. The foreign ministry maintained that line yesterday. Now, despite all of this, there are talks that are taking place with Oman. We've reported on that last week. They are ongoing talks to reopen the Strait of Hormuz in some shape. We still don't know just exactly what mechanism Oman and Iran will take to be able to reopen the Strait of Hormuz. We understand that Iran wants to temporarily open a middle passageway, if you were, in the waterway to help ships and vessels make their way through the Strait of Hormuz, demining the Strait of Hormuz, tolling systems and whatnot. Those are things that we suspect might be getting discussed, but we just have no clarity really about what exactly is under discussion between Oman and Iran. But when it comes to the wider discussions, nothing is different from yesterday when President Trump went from threatening the biggest strike since World War II to saying that discussions will go on Monday. We don't really have clarity if those talks have essentially happened or not, Lizzie. But a space to wait and see, really, for us here in the region.
Okay, good to check in. Abir, thank you. That's Bloomberg's Abir Abu Omar. Well, coming up, will SpaceX have a smooth landing or a bumpy touchdown when they report first quarterly results later? That story's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:25 a.m. here in London. Well, SpaceX is set to report its first ever quarterly results later after the company's blockbuster IPO. We can bring in our Bloomberg aerospace reporter, Leen Al-Rashdan, now for a preview. Leen, good to have you on set for the first time here in London. So much has been talked about, written about the IPO. The shares, of course, have tanked since then. What have been the big issues facing SpaceX?
Well, like you said, the shares have gone down below their IPO price, and that always puts a lot of tension in investors. And this complex lockup period that they have will be ending soon, so we could see some share sell-offs. So investors will really be focused on this earnings call and try to ease some of the concerns they have about certain parts of the business and their tie-up with Tesla. Okay, so what are we looking out for? Key lines to listen for on the call? Because it's always a blockbuster event when we hear from Elon Musk. Yeah, so we have no clue what Musk is going to say, but investors will be kind of trying to dig in more about the collaboration between SpaceX and Tesla. They've been sharing technology, they've been sharing a lot of the ventures that they have, especially on semiconductor manufacturing, and now they'll be looking more into whether they'll actually merge financially. I mean, they have a lot of tie-ups in Starlink, in AI, and that's also, AI is a big thing that they're looking into. We're wondering about the capex related to that. These are very, capital-intensive projects, that and Starship, which we'll be looking into whether they'll be able to, how long it will take them to actually send satellites and people and cargo into space. That's a complex project. And then we have the Starlink subscriptions, which is a big revenue generator for SpaceX. We'll be looking into those numbers as well. Okay, great. Well, Leen, thank you so much. I'm sure we'll be keenly watching those numbers later on. Really appreciate the preview. Leen Al-Rashdan there with the SpaceX preview. Well, of course, we've got lots and lots of earnings coming out today, not least from AMD as well. We've already had Palantir. And coming up on Daybreak Europe, after a record-breaking quarter for Wall Street, how do the UK's banks stack up? We'll be discussing that next. Of course, we've already heard from HSBC this morning, that exclusive conversation with the CEO earlier on in the programme. We're looking at European stock futures, higher 0.3% for Euro Stoxx 50. FTSE futures up 0.2%. Stay with us for a full check on these markets. This is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The Nasdaq's powerful surge hits a road bump in Asia, with the benchmark trading lower. European and US futures in the green, though, as traders digest blockbuster numbers from Palantir and countdown to SpaceX later today. President Trump says his offer of talks is Iran's last chance, as Tehran denies negotiations with the US are even taking place. And HSBC beats profit expectations and announces a new buyback of up to $1 billion. The chief executive tells Bloomberg the bank is seeing real benefits from AI use. Well, a very good morning. Here is the picture in markets. If you're just joining us, welcome to the show. It's 6:30 a.m. here in London. Asian stocks on the left, as you can see, are slipping by 0.5%, so not following Wall Street's tech-led rally yesterday, in part because it's been a choppy session on the Kospi in South Korea this morning. The Kospi now down only 0.4%, so pairing earlier losses. The S&P, meanwhile, closed near a record high yesterday, and futures are pointing even higher stateside and in Europe this morning. Now, flip the board cross-asset, and we've got Brent up 1.7% to $85 a barrel. Traders focused on President Trump's latest offer of talks. We did have, of course, its biggest drop in a week yesterday, and gold range-bound as investors monitor those diplomatic efforts. $4,066,000 is where we trade on the yellow metal right now. The yen, always in focus, of course, given that last intervention. We're looking out for another one, but posting its first decline, I should say, in 5 days as the impact of that intervention starts to fade. So will we see more? We're only at 157 per dollar as things stand. Now, let's turn back to earnings. Breaking numbers out of Germany, with this time from Big Pharma. The red head is that second quarter adjusted EBITDA comes in at 2.14 billion euros, beating estimates of 1.93 billion euros. They have also confirmed their currency adjusted outlook. And so those numbers coming in out of Bayer, and we will mind that stock as well as the many others at the open this morning. Now, turning over to banks, and we have seen quite a strong quarter for Europe's biggest banks, helped by market volatility. But the numbers have paled in comparison to the record trading hauls reported by their Wall Street peers. Joining me now is Viki, Farmaki, Senior Equity Research Analyst at State Street Investment Management, so we can weigh all of this performance. Viki, great to have you back.
Good morning. Good to see you.
I don't know if you caught it, but we were hearing from the HSBC CEO this morning. Loads of bank results to digest with you. Is the strength because UK banks are fundamentally in better shape than perhaps they were a few years ago, or is it that they're just benefiting from higher interest rates and all of this is going to fade away?
Absolutely. That's a great question. And I think we've been discussing this for a few quarters. Is this as good as it gets? And it's a very important question. I think part of it would depend on the macro. And we need, the UK macro, the GDP growth, the interest rates to remain and be quite supportive. But bank managed teams have been delivering on the levers they've been able to manage. So they've been building the deposit franchises. We've seen strong loan growth. We see diversification of income growth. And credit losses have been fairly low versus historical standards. So we're entering this phase now, the second half, with very robust profitability and robust capital levels. And investors are increasing their confidence that bank teams can execute. But the rest will depend on the macro, of course.
Yeah, when you look specifically at investment banking, it's been a standout. Right. You've had all of this volatility in markets, similar strength on Wall Street. Absolutely. Is it just that markets have been busy this year, or is it actually European banks more broadly are getting competitive again?
I think it's a combination of both. We've seen banks definitely delivering on their plans and executing and putting their teams together, and cost efficiencies providing a lot of support. But we have a supportive macro backdrop. And we'll see how far that continues. But it's definitely been a supportive, and versus their US peers doing quite well. So we need to see how that develops going forward. But we say that every quarter now, and every quarter we continue to have a good macro. But it is a positive picture so far.
And we were hearing from George Elhedery there about AI. I spoke to the Stanchart CEO last week about using both Chinese and US AI models. What have you noticed about how banks are actually investing in AI? Are you seeing real improvements in productivity yet, or is it just kind of laying the groundwork for now?
And again, it's a bit of both. We are seeing some improvements. I mean, we see their cost-income ratios improve quite significantly, and part of that is driven by productivity. But it's still early days. I think their plans are long-terms, and they're really working about building their capabilities and being very thoughtful about those capabilities, because they need to build their defenses, they need to build their detection measures. But this is early days, and there's a lot more to come in terms of the digital servicing and changing how they work, actually, and enhancing that work.
What about on the job losses front?
Well, the banks are framing this, as I said, as a change in the way people are operating and enhancing what they're doing versus thinking about any specific role. So it's a whole back and front office as well. So it is changing the workflow versus changing, again, any specific role.
Okay, on M&A, we've seen NatWest buy Evelyn Partners, Santander completing that takeover of TSB. Is that the start of a wave of consolidation in UK banking that's coming, or is it just kind of, a couple of one-off deals?
I think banks are in a good position from a capital perspective. So there's more activity to come going forward. And I think they've been able to optimize their capital. They're giving back buybacks and dividends, and M&A is part of that toolkit. And I think we're still in good positions to expect more to come from that.
Okay. We also heard from Jamie Dimon last month, of course, the JP Morgan CEO, saying that his bank's going to scrap its London HQ if the new one, if the UK raises new bank taxes. Of course, there's so much speculation around what the new Andy Burnham government is going to do. We've got the budget coming on October 28th. But also Anna Botín at Santander saying that taxing banks more heavily than other sectors, and I'm quoting, makes no economic sense. So how seriously are you pricing in a new UK bank tax from the Burnham administration?
I think you have to take it in consideration. As equity investors, we don't like extra costs. That's obvious. But I think you have to take it in consideration. What's important is the resilience of the banks right now. They have very good profitability. They have very good capital levels. So they're going into this from a position of strength. So they will be able to manage and have some flexibility around that going forward.
Oh, so they can take it. That's kind of tempting, perhaps, to the government.
Well, as equity investors, as I said, we never like extra costs. So I think there is always an offset to that in terms of cost of equity. But in terms of banks and the strength and the resilience, I think they're in a good position.
OK, so now as we look ahead to the rest of the year, Viki, what's the biggest thing that could knock this strength that we've already seen in the first half?
I think I alluded to that, is the macro. I mean, banks are the most sensitive macro sector out there. So we do need to have a backdrop that's supportive for them. We need to have a GDP growth that's healthy, interest rate environment that's healthy. And I think that's one of the key risks. Of course, everyone is also watching what is happening in the private equity, private credit sector. And banks have been managing that quite well. We haven't seen any systemic issues. But from investors and regulators, that's an area of scrutiny.
OK, so no major signs of stress in credit yet. Viki, great to have you back. As
Thanks for
always.
having me.
Thank you. Viki Farmaki, Senior Equity Research Analyst at State Street Investment Management, on the bank scorecard so far this season. Well, coming up, the South African lender Nedbank reports a record first half performance. We'll be hearing from the chief executive next. This is Bloomberg. Back to Bloomberg Daybreak Europe, 6:40 a.m. here in London. Well, Nedbank has reported a marginal rise in first half profit as loan growth improved and fee income grew. The South African lender also says that it's been able to keep a lid on expenses. And our chief Africa correspondent, Jennifer Zabasaja, joins us now from Johannesburg for more. Jen.
Yeah, Lizzie, good morning to you. We do have Nedbank Chief Executive Jason Quinn, who is also in Johannesburg off the back of those earnings. Jason, thanks so much for being with us. We just heard Lizzie there noting marginal growth on headline earnings for Nedbank. But in the statement, you said that the results outperformed expectations. What were the headlines for you?
Yeah, thanks very much, Jennifer. And good morning to all of your viewers as well. Look, there's a key thing. Our earnings on the face of it look pretty flat. Diluted headline earnings per share only up 2%. But Jennifer, if you look at the underlying headline earnings growth, in other words, we made R1 billion off our investment in EcoBank in the first half of last year, which we disposed in the second half. And if you exclude that base effect, our diluted headline earnings per share was up around about 15%, which I thought was really good. And good underlying metrics as, revenues grew nicely. We're seeing benefits coming through our cost line. The cost growth was only 3%. And yeah, we kept our return on equity at 15% despite the base effects of disposing of EcoBank.
How much have you seen some of the volatility, Jason, affecting the bank? We were just talking about some of the benefits that U.S. banks are seeing. What have you seen transpire for South African banks and Nedbank?
Well, look, South African financial markets have been pretty resilient. If you look at first quarter, everything was on track. Second quarter, of course, with the effects of the conflict in the Middle East impacting oil very quickly. And as you know, that transmits very quickly into the South African consumer base here in South Africa as petrol prices go up. But if you look at financial markets, I would say the Rand was pretty resilient. Jennifer, we saw it stay in the mid-16s. We saw long bonds go out a little bit, but then recover into the sort of low 8s. And I'd say that's pretty resilient. If you look at our global markets business, our trading income in fixed income and currencies was reasonable, but we did really well in equities. Our equities desk had a very good half. And that was on the back of, as you say, much client demand, much risk management, but a fairly good trading performance from our side in equities.
And Nedbank still maintains growth for the South African economy to be higher than what the IMF is projecting for 2026. What is it that you're looking for? What encourages you about that conviction?
Well, look, I mean, certainly the conflict in the Middle East has been a disruption, and it's delayed probably some of the recovery we might have seen otherwise. We had pretty strong conviction around stronger GDP growth this year coming into the year. We've moderated that downwards, so I think we're looking at a sort of 1.3 print for this year, improving to 1.9 over the next couple of years. What gives us conviction, Jennifer, is the things like structural reform starting to make progress. I would say if you look at something like the electricity availability factor, that's improved dramatically. If you look at challenges in the past in logistics, we're seeing signs of improvement there, both in ports and in rail. And then, together with the government, public-private partnerships are much more plausible than what they used to be. So if you look at all of that, you'd say that there's a 1.1 trillion rand sort of opportunity of infrastructure investment. We're really well positioned as Nedbank to participate in all of that because we are the infrastructure finance bank in South Africa, I would suggest. If you look at it, though, like of that, right, bunch goes to energy, let's say 200 billion. About 400 billion probably goes to logistics. And as that gets executed over the next couple of years, it'll create a lot of jobs and it'll be really good for the economy.
Do you think, though, 2030, we could see 2.5% GDP growth, which is what President Ramaphosa is gunning for?
I would support that, Jennifer. Given the conviction we've got on infrastructure and these types of things, I think that's a plausible scenario.
What though stands in the way of that, in your opinion? Is there anything that concerns you? Because there is still quite a bit of the reforms that need to be implemented at this point.
Yeah, I would agree. Look, I would also say that oil price at a much more affordable level would be a good thing. That's not in our hands. That's more to do with global macro factors. So let's park that one headwind. As for the other headwinds, I do see much collaboration between business and government on these matters. I do see, if you look at the sovereign itself, fiscal prudence, Jennifer, for a number of years has put South Africa's rating in a much more attractive level. If you look at all of the different rating agencies, either upgrading and some even with positive outlook. So much more investable from that perspective. And if you look at where, like I mentioned, bonds are trading, the sort of risk-free rate is much lower, which for someone like me, like a banker, indicates that there's financing available for many of these opportunities that exist.
Jason, let's step outside of South Africa because the results also noted your ambitions for East Africa and NCBA there. You've also noted some ambitions to expand into oil-producing nations. What does the timeline for that look like?
Yeah, so the acquisition by Nedbank Group of NCBA is well on track, Jennifer. The NCBA shareholders have tendered their shares. So we expect to obtain about 66% of NCBA, in line with what we targeted. We're currently obtaining all the relevant regulatory approvals that are required for this transaction, and we expect to have deal closure in Q3 or early Q4. So well on track from that perspective. But Jennifer, the most compelling thing is that the combination of our businesses, I think, creates a really strong proposition for collaboration between the two businesses. For instance, Nedbank will bring corporate and investment banking type activities into Kenya through NCBA. And then NCBA has incredible digital platforms, which we think are scalable and transportable into different markets. Right. So really looking forward to consummating that transaction.
What about the oil producing nations then, Jason? Namibia, Mozambique?
Yeah, we have strong presences in both of those markets, in Namibia and Mozambique. We think that oil off the coast of Namibia and gas off the coast of Mozambique will transform those economies over the next number of years. And we're looking at that whole value chain, Jennifer, like in particular, if you look at downstream for commercial businesses, small, medium enterprises and the like, we expect significant growth as that infrastructure is built out.
All right, we'll leave it there with you. Jason Quinn, always great to speak with you, Nedbank Group Chief Executive, joining us on Results Day in Johannesburg. Lizzie?
Jennifer, thank you so much. That's Bloomberg's Chief Africa Correspondent, Jennifer Zabasajja. Well, let's turn to some other top stories that we're following for you this morning. And more earnings. Lufthansa has warned of greater uncertainty over its full-year outlook, citing volatile jet fuel prices and shorter booking cycles. The German airline now expects full-year capacity to be in line with 2025, so down from a previous forecast of as much as 2% growth. Second quarter profit more than halved as fuel costs surged. Elsewhere, Palantir shares rose in late trading after the company raised its full-year revenue and income forecasts and reported second quarter sales that topped Wall Street estimates. The software developer and military contractor boosted its outlook after what CEO Alex Karp described as otherworldly commercial demand. And shares in Chevron and ExxonMobil fell after President Trump scolded them for their soaring profits after oil prices surged amid the war in Iran. The companies made a combined $29 billion in the second quarter, equivalent to around $318 million a day.
They're making too much money, okay? Based on a shortage, they're making too much money. I don't like it. And I should be the last one to say, because I'm a big free enterprise guy. Chevron, too much money. ExxonMobil, too much money. When you look at one company where they made 12 times what they made the year before, they got to give some of that back to the public, and they better cut the retail price, the consumer price.
And here in Europe, the Rhine River's water level has fallen to its lowest since records began in 1880, as hot, dry weather continues to spread across Europe. At the key shipping point of Kalp in Germany, water levels have dropped to just 24 centimetres, raising the risk of disruption to the transport of coal, fuel and other industrial goods along one of Europe's busiest waterways. Well, coming up, we shall bring you some terminal charts to frame your thinking for the day ahead, including on those Rhine levels and how that's affecting trade around the European continent. Stay with us for more. This is Bloomberg.
We defended ourselves with an open model, right? And some of the guardrails prevented us from using frontier APIs to defend ourselves. So kind of like improving the tools for defenders, instead of obsessing about not giving them to attackers, I think would be a good thing in the future to make sure these incidents are not too harmful.
Hugging Face's CEO discussing the cyber attack that hit his company linked to OpenAI's ChatGPT there. Well, let's turn to some terminal charts to frame your thinking for the day ahead. I'll pick up on the tech theme. And today, of course, we are watching futures higher on the S&P. We had a close near a record high yesterday for the US index, and it was boosted by tech. So just reflecting on the mega cap tech stocks, we've had Amazon surpassing $3 trillion in market value for the first time. Meta extending its streak to 3 days of gains, and Microsoft closing at its highest since December. Take it all together, and if we just look back at last week, it adds on to what was already a great week for the hyperscalers. Their biggest outperformance compared to the Nasdaq 100, as you can see, by almost 11 percentage points there. And now if we just turn back to Europe, because we were hearing just before the break about the water levels in the Rhine, let's turn to how that's all going to affect trade. So there's a problem for vessels that are heading to southern Germany and to Switzerland. It means you've got higher freight rates because barges can't carry as much cargo in shallow waters. You can see here how those water levels have fallen, and flip the board because you also have higher costs to ship diesel, climbing in fact to their highest level since 2009. That presenting a stagflationary risk for stocks and bonds. Particular ones to keep an eye out on are BASF, Covestro and Evonik, all in focus. Now, let's take a look at some of the risk events on the docket for today. So it's a busy one. We've got at 1:30 p.m. London time US trade data. This, of course, precedes the latest tariff announcements. We also have job openings numbers, but these numbers have been revised a lot in recent months. And then perhaps the highlight, those SpaceX results coming out, and they are the first since the IPO, the shares having tanked since then. So we shall keep an eye on the market reaction. Just in terms of what we're looking out for at the European cash open, because we've already had a raft of earnings this morning here in Europe. Zalando expected to be dropping by double digits already, predicted on TradeGate. And this is after that company narrowed its full year adjusted EBIT forecast. So we shall keep an eye on the retailer. You can see its 1 year performance here. But coming up on the opening trade next, we will have a busy set of interviews, including with the BP CEO, Meg O'Neill, joining the opening trade to discuss the oil majors' results. Those numbers breaking at the top of the hour, and that interview at 7:15 a.m. London time with Anna Edwards. The opening trade is coming up next. That does it for Daybreak Europe. This is Bloomberg.